Hello everyone, welcome back. I'm Jeb Smith, real estate broker here in Southern California, and today we're going to do a video that a lot of you have been asking for quite some time, and that is USDA loan requirements. The reason I haven't done this video before now is because quite frankly, we don't really use USDA in Southern California. The population is way too dense here. There's just no rural properties in the area that we're located, so we rarely see USDA. But I recently read a stat that 97% of the United States could use a USDA loan. So we're going to dive into the details today. We're going to talk about income requirements. We're going to talk about credit score requirements. We're going to talk about eligibility requirements when it comes to type of property, how they use income, all of that good stuff. So make sure you keep track of that. And what I'm going to do is I'm going to provide some links in the description below as we go through some of this to help you find out if the property you're looking at is eligible for USDA. And you know, if you're unsure of whether or not you want to do USDA versus say an FHA loan or a VA loan, what I'll do is I'll also link to those in the description below if you want to watch videos on the eligibility and requirements for those. But for now, I want to ask a favor. If you're new to me, new to my channel, it's all about real estate, helping buyers, sellers navigate that home buying, home selling process, whether it's, you know, dealing directly with housing or the finance side. So do me a favor, hit that subscribe button and give me a thumbs up if you like this content. Let's start with talking about probably the biggest benefit of using a USDA loan. But before we get into it, let's talk a minute about what USDA loans are used for. So USDA loans are made for those that live in rural areas. Well, what's considered a rural area? Typically when it has a population less than 35,000. So if the population is less than 35,000 in that area, typically you can do a USDA loan. But one of the biggest benefits to using USDA is the fact that they allow no down payment. So you can buy a property at 100% of the value of what you're purchasing. Kind of like VA, but VA requires you to be a veteran, someone that served in the military, whereas FHA requires you to have at least a 3.5% down payment, and conventional somewhere between 3 and 5% down. So USDA is a huge plus when purchasing a property because it allows you to put zero down. And some of the other benefits of using USDA versus say a traditional FHA loan is that the upfront mortgage insurance on USDA is less. With USDA, it's only 1% versus FHA that requires a 1.75% funding fee. What is that funding fee? It's basically a fee for them doing the loan. So if you bought a $200,000 property, basically they're going to add 1% of the value of that loan, so $2,000 on top of the loan. So in theory, you'd be financing $202,000 versus just the $200,000 property that you're financing. Now USDA does have mortgage insurance like FHA, but it's quite a bit less. It's 0.35% versus FHA at 0.85%. So almost a third less in the monthly mortgage insurance versus your traditional FHA loan. Now USDA does require that the property you're purchasing is your primary residence. What is a primary residence? That's a property that you're going to live in full time. Now you can have other properties when buying using a USDA loan, but understand that those properties can't have a USDA loan on them currently, and the new property you're buying has to be your primary. In addition, it has to be in one of the qualified rural areas. Now we spoke about this at the beginning of the video, and what I'll do is I'll provide a map below where you can actually search the area that you're looking to see if it's a qualified area. But what happens is you put in the address, you bring up this map, and in every area that is in blue in this map is an area that they don't allow you to do rural financing. So no USDA loans in those areas, whereas the areas on the outside of those boundaries would be able to do USDA loans. Now here in Southern California, I did it on the map just to see where the closest area was, and it was in the middle of the desert, a couple hours away from here. So that's why we don't really see them in our market. But again, a lot of the country does have areas that qualify, and if you put in an address that does meet the qualifications, it will tell you on the screen that that property does qualify for USDA. Now, one thing about USDA and credit scores is they don't actually have a minimum credit score requirement. Where FHA has a 500 minimum if you're putting at least 10% down, or 580 minimum if you're putting 3.5% down, USDA has no minimum credit score, but if it's under a 640, they do require a manual underwriting on that file, which means that it's harder to qualify. Whereas if you have a 640 or higher credit score, they can run it through their automated underwriting engine and see if you're approved with a lot less restrictions than those with less than a 640 credit score. Now, the one thing about USDA that is a lot different than any of the other loans out there is they have a household income limit. So when qualifying with USDA, they don't have a max loan amount that you can qualify for, like FHA or even conventional. They have no max loan amounts, but what they do is they have debt to income restrictions, and with that they have income restrictions. So anyone in the house that is over 18, they will use the income of those people along with your income combined to see if you meet eligibility requirements. Now, typically for a household from 1 to 4, the max income you can make is $90,300, I believe. And for a household between 5 and 8 people, the most you can make is $119,200. Now, there are some adjustments they make based on where you live in the region, and that income requirement can go up or down based on the median income of where you live. So that's why it's always best to talk to a mortgage professional, have them run the numbers for you and tell you exactly whether or not your income qualifies. And lastly, the debt to income requirement for USDA is probably the most strict out of any of the other lending programs like FHA, VA, or conventional. They want their back-end ratio at 41%. What does that mean? That means that you can't spend more than 41% of your income, your gross monthly income, towards debt. That includes credit card payments, car payments, student loan payments, and your mortgage, taxes, insurance on the property. So if you made $10,000 a month, hypothetically, 41% of that is $4,100. You can't spend more than $4,100 on all of those things in order to qualify. Now, keep in mind, they will go higher than 41%, but you have to have contributing factors, which means you have to have maybe really high credit scores, additional assets in the bank. Maybe you've been on your job for a long time, some compensating factors, and they could go as high as 49%. But if you're trying to calculate this on your own, use the 41% as a baseline, but also another reason that you should talk to a mortgage professional and let them run the numbers so that you're getting accurate information and know exactly where you stand. Now, if you're considering purchasing, wanting to use USDA, and you don't have a mortgage professional that you trust, or someone that's referred to you, do me a favor, reach out to me directly. I'm happy to put you in touch with someone that I network with or my local mortgage broker networks with. We have a huge database of qualified people that do business the way that we do, and we're happy to put you in touch with those. And keep in mind, I get nothing from that. There's no referral fees, no fees paid to me as part of that. It's just something that I do to know that you're in good hands and make sure you're getting taken care of. And the same can go for a real estate agent. If you don't have a qualified real estate agent, do me a favor, reach out to me, and I'll definitely put you in touch with somebody who can help. But if you have additional questions about USDA, FHA, VA, any type of loan program, do me a favor, comment below. I'll definitely get back to you and provide you with that information. And if there's something else you want me to touch on, do me a favor and reach out to me directly. But for now, I appreciate you taking the time to watch. I appreciate your support. We'll talk to you soon. Have a great day. Bye-bye.